Good evening, everybody. All right. It's going to be cold here in Pittsburgh. I think they're going down into the negative numbers tonight. Got all the fireplaces working. All right. Let's see. Echo in the sound. Is everybody else getting an echo or anybody else getting an echo? SK, you're logged in twice. That's why you're getting an echo. All right. What is the market doing? Market keeps consolidating. Notice how the tails come to the downside and they finish up strong at the end of the day. That's healthy in the sense that that the profit taking's going on each day, so there's really no built-in or any exuberance. So the only really concern we have right now is we're right about the same level that the Dow topped out before. It's a little hanging man, but we're still trading up above the 3T line, let alone the T line. And there's really nothing yet to show there's any profit taking or any severe reversal at this point. The S&P 500 is a little bit stronger at the end of the day, closing up. I guess they opened or closed up. Let's say here above where they opened. And the NASDAQ is still showing good strength. Again, it's using the 3T line as support. So one of the things you just have to kind of assume that is if you're in an uptrend, you're above the T line. If you're above the 3T line, that means you're probably still in a pretty strong uptrend with no change of investor sentiment. So it's likely we're still have some more upside. At least we want to stay long as they don't close below the T line. Crude oil had backed off where it was. Let's make this a little bit bigger. It had kind of this little trend channel, and they took it down below that level today. So that doesn't bode well for crude oil prices heading up. We'll have to see what they do tomorrow. If they bring it right back up, that's telling us they are finding support in here. Yeah, I look for the Scotch also on these type of nights. I can't even go out and get firewood most of the time because we've got so many deer out front eating that if I open the front door, they all scatter and they don't come back. So I've been given strict orders not to disturb the deer while they're eating. All right, let's see what else we got here. Gold, as you can see, is still in this downtrend ever since they broke down through the T line. You want to stay short. Silver, same scenario. That's not a very big chart on silver. F.SI. This is kind of your kicker signal. This is where they took it back up and immediately brought it right back down, telling you they were still in a downtrend. Yeah, they come back eventually. All right, what else we got out there? Whoops. The TYAH. Bond prices, as we see, have pulled back, meaning the bond prices have come down, yields going up a little bit, but they're still right here at the bottom of this trend channel. And they did a little Morningstar signal today. This is what they're doing after hours. So we've got a Morningstar signal. If they close back up above the T line, they're probably climbing back up into this trend channel. teach them to bring wood tokens. Yeah. I heard one of them say, one of the does saying, that's the last time I do that for a couple of bucks. Let's see. I've been trading lean hogs, because there's the signals. There's your Morningstar signal, gap up, doji sandwich. Closed out the position up here, and this is why I trade off the 10-minute chart, because they took the price up pretty quick this morning. And then as soon as I start seeing the first signs of profit taking after that first run, I'll close out the position and wait for the next pattern to set up. In this case, I think I came back in but got right back out again. So the big profit was on the initial run-ups this morning. And as you can see, after that, it really didn't do anything. Now, the one I've been making money in, I made some good money on a quick trade on that one today. But the one that's been making good money for me right now is being short coffee. Here's your bearish J-hook pattern. And I'll just stay short on this as long as they, whoops, that's the 10-minute chart. This is the daily chart. As long as they can't get back up above the T-line, and notice our little doji sandwich telling us there's probably more downside. Let's see, natural gas. I should be able to get natural gas, AJ5. Natural gas may be running into it now. It's in the bobble here as long as it's above the T-line. And it didn't do a sell signal. It sold off at the 50, but notice this is not a dark cloud, not a bearish harami. This is just a down day, so I'd give this a little bit more leeway. I definitely need to see this close below the T-line before going short. But as we can see, we're in a downtrend. Now we have to see whether they're confirming that they couldn't get back up through the 50-day moving average. The dollar kind of holding up in here, not tradable right now, but getting close. If it breaks out through this downtrending channel, that means we're now in the next wave. Okay, we did go to our interest rates. Let's see. Soybeans. That's not what we wanted. Yeah. Soybeans are K. All right. DJE K5. Soybeans looks like it's trying to do a scoop pattern, but not really tradable. It's in a bobble right here, so nothing to trade on soybeans at this point. Wheat looks like it's in a bearish J-hook. There's your left-right after a shooting star. Looks like they could be taking wheat down further. So if I was shorting wheat tomorrow, I'd just be very diligent as far as seeing what happens once it gets to this level to see whether they're supporting as a double bottom or going into wave 3 to the downside. I'm sure there's something we're forgetting in the commodities area, but I can't think of what it is. Everything else is just kind of cocoa has already had its nice move right up here to the 200. Corn may be rolling over too. Let's take a same scenario as wheat. If I'm shorting it, as soon as it gets down to this level, I want to see that it breaks through. Crude oil we did. Crude oil was looking like it was failing here at the 50. It broke this downtrending or the support level. So this might be now on its way back down. And so this is the daily. This is what right now, wouldn't trade it because it's really not showing us too much as far as anything on the 10-minute chart. Oil of blue ice failure. No, this is resistance. A blue ice failure is when they come down through a support level, come up and fail. This is a downtrend. It's coming up, failing at the 50, maybe starting to head lower from this point. Okay, we're going to kind of concentrate on the fry pan bottoms today. Let me start cranking through some of these that are looking good. NC is one that we've been hanging on to just because, as you can see, it's never been able to close below the T-line. Still in an uptrend. Now, the fry pan bottoms, we recommended SEMP the other day because of this little pattern right here. And it had a nice day, a doji sandwich. You continue to stay long on any of these that are showing good good action coming out of the fry pan bottom. There's that slow curve coming out of ASPX, getting a little bit toppy up here, but my feeling would be that you're coming out of a fry pan bottom, you're doing a J-hook pattern that might be a wave 1, wave 2 sideways, wave 3. There's really nothing nothing showing that there's any weakness. Oh, let's see. I don't know what sugar is. Sugar. SAAK5. Humbug. SF.SU. There's your sugar, still in this downtrend, starting to gap down some, more than likely coming down to test the bottom of this trend channel. And cotton has had a nice uptrend ever since the bullish engulfing signal. How come these charts get so small? Now I got to see whether it's coming back to test the T-line or ready to roll over. And this is where you kind of watch to see what it does after the T-line. Please describe how to get on board a steady eddy like Starbucks. Well, it's not that you get on board a steady eddy. It's that when you saw that first buy, which is that gap up and expecting a 45 degree, that once you see the 45 degrees in progress, there's nothing you want to do as long as that steady eddy is staying up above the T-line. So that will come into play. I don't know what copper is. Is this copper? F.CP. Copper, I wouldn't be very long or short. There's nothing here to give you any real good trend. All right, there's some other good, let's get back to the stocks. Lake, there's your little scoop pattern. And as long as this stays above the T-line, you stay long. SK, if I see a blue ice failure, I'll point it out. Blue ice failure is when it comes down through a support level, and then it comes back up and tests that support level, and if it fails, then it goes back down to the next major support level. I'll see if I can find one here in a little bit. Here's another fry pan bottom breakout. SRE or NE we recommended a few days ago. And right now all you can do is stay long on these as long as it stays above the T-line. AGIO is a blue ice failure. Yeah, you can consider that a blue ice failure. Notice how they came down and fell through the ice. Now they're coming up and trying to find the hole that they fell through and then failed, and that failure was signified by a doji gap down. So right now you just stay short until you see a buy signal. Thank you for that one. Now DYAX is the one that we've been hanging on to, another fry pan bottom. And again, this is where the significance of knowing what the individual patterns or formations are showing you, right here on the T-line, there was lots of indecisiveness until they made up their mind and did a left-right combo heading back up. Where's the first target? Probably want to watch right up here to see what it does once it hits that level. And ADHD also has this fry pan bottom. You stay long on this one as long as it stays above the T-line. What we're anticipating or hoping for is if they break out through this level, that gets the next run pretty strong heading up for the 200-day moving average. Oh, okay. DYAX has earnings tomorrow. Is that what you said? There you go. All right. Thank you, Don. And HZNP. This is one that I kind of put into the category of anticipation, because if we've had, notice how the uptrend has kept us up above the T-line, had a big move, and then a doji. This is where you can kind of anticipate even an option trade for a day trade. But if they open this positive and they do a doji sandwich, that's going to be a significant move, breaking up another big day. So this is I have on the watch list tomorrow, that if it opens positive, and when I say opens positive, what we don't want to see is when we wake up that the pre-market futures are showing that the Dow is going to open down here. We want to see the Dow still opening somewhere in here, not changing the overall market direction. This one came up early today where somebody said, oh, they took some profits on ADXS, except this is why you want to know what your patterns are telling you. This is what we call kind of a double doji setup, where they took it up, did a doji, hit the support levels, and then opened positive. That's usually telling you the profit taking that was occurring from this move is over. You start watching for the next move to the upside. If I already have a HZNP, when would I want to take my profits? Well, that's why you want to know what to kind of expect out of each pattern. That if this moved up this magnitude before a doji sandwich, that if it got to where another green candle was about the same magnitude as this, then I'd start taking profits. At this point, I'd stay long. I probably wouldn't want to see it close back below the halfway point of this candle, which would also probably coincide with the T-line tomorrow. Yeah, all right, so there's everybody's been, I say everybody, David L. has been spotting a lot of these fry pan bottoms, especially when you see a kind of a doji gap up. Notice what they did with the consolidation, right back to the T-line. Definitely would not be afraid to be buying this one on positive trading tomorrow, with the expectation, that if this is wave 1, wave 3 could be the same magnitude. All right, they've all got earnings coming up. Now remember, earnings are not a deterrent. Usually they will give you a good idea of what's happening. The people that usually are following a company and know what's happening, if they're buying on the day that earnings are going to be reported that afternoon, that means they've got probably enough insight or information to tell you that those earnings are going to be pretty good. Now, I was trying to think of which one that did not work, or not Loco. What was the other one? I can't remember. One of the food stocks came out with earnings. They missed, and they were down 7 points that evening. So doesn't always work, but the probabilities are usually in your favor, that the charts are usually going to tell you what's happening. This is a very nice chart. OPK came out of the little scoop pattern. Now your noodles, that was it. Now you have your J-hook. I wouldn't be afraid to be buying this one. I wouldn't have bought this one here because you were in the overbought area in an extended uptrend. But I would buy it here because this told you the consolidation, wave 2 was over, wave 3 is in progress. And Noodles had a very good looking chart going into earnings, and then slam, bam, thank you, ma'am, they took it the other way, which means if you see that happen, a lot of people say, oh, what should I do now? That wasn't what you wanted to see coming out of this chart pattern. You close it right away. There are going to be times when, I don't remember Dean Foods. Dean Foods got hit a while back and kind of failing here at the T-line. You probably still want to stay short on this one. Oh, I forgot what I was going to say. I had something important to say, and it went in one ear and out the other. PTX, nice fry pan bottom, nice little slow curve, and a breakout through the 50. That usually tells you if they broke out through a resistance level, there's going to be more upside. Hang on to your individual ones to the end. When I tell Jim to do the double line, then we'll get as many as we can. And we want to try to keep them to 1 or 2 each so we can get to everybody's. SRNE, oh, we did that one already because of this fry pan bottom. And again, this is where the T-line helps you immensely to just stay long in these positions until you see a sell signal. How often a breakout through the 50 retraces. That is where you kind of have to read your chart. Sometimes by the time they get up to the 50 and break through, they're way up in the overbought condition. So you just watch to see if you get a sell signal or a potential sell signal, like a little shooting star or something like that, that tells you, well, I might want to take profits here because if they open it lower tomorrow, they're probably taking it back to the T-line or the 50. Nice slow curve. Now this is why we get ready and buy when we start seeing the slow curves starting to take place, because this is the type of moves that we're expecting. Right on the close today, I bought calls in SWKS because it was doing this, getting ready that if this is building up, and notice this fry pan bottom had the little dimple right here. And usually the dimple is the halfway point between where it started and where it's breaking out. So the risk-reward factor on buying calls right here is if it fizzles, loss, you get out of the trade. If it works, you're usually going to get a very big move to the upside. Forgive me. Will you be kind enough to define the black? Oh, okay. The red line is your 200-day simple moving average. Blue line is your 50-day simple moving average, and gray line is your 20-day simple moving average. That's what every major money manager has on their charts to make their decisions about their positions. Then the black line is what we call the T-line, the 8 exponential moving average. This is the most important trend analytical tool I've come across in 40 years. Everybody says, well, do you use Bollinger Bands? Do you use Heiken Ashi? My late friend Dave Elliott's Movo Bands. Those are all good, but the T-line is probably your most effective for telling you whether you're in an uptrend or not, or whether that uptrend is reversed. How do you choose which calls for something like W? I look at see what the risk-reward factor would be. And usually if I'm buying calls, I'm going to buy calls when we are this far away in front of expiration date, because there's still a lot of time. If we're getting 2 to 3 weeks in front of expiration, I might have looked at spreads because they're going to make more sense. The 20-day moving average usually becomes more effective when you see a steady uptrend where they're not getting back to the 50. The 20 becomes a much more effective indicator. Say much more. It becomes more effective if they're not oscillating enough. If it's more of a steady uptrend, the 20 becomes more critical. Let's see, what else we got here? did I do P? Oh yeah, we did PCYC. This was the example of why you start buying in here, because if they break out, it's going to be a good strong price move. Let's see, WMS, another slow curve, and notice kind of the doji sandwich breakout, which implies there's still more upside. I would draw a line right up through here and kind of anticipate moving up here into this range before running into resistance. TSEM, these are the type that you want to go after because a lot of people say, shoot, I don't want to buy a stock that's already up 15, 17%. You do this because this gap up, especially through the T line and back up off the 50-day moving average area, is more than likely going to take you back up at least to the top of the trend channel. So this is the message that there's something dramatic has changed. And remember, the bigger the signal, the more compelling there's been a change of investor sentiment. There's something about the exponent of 2 cubed that makes the T special. I'm not a mathematician, but it would be interesting to get a math professor. I don't think so. The 8 exponential moving average is not on anybody's charts except ours or people that are starting to watch candlesticks. So there's a difference because a lot of times the major moving averages will act as magnets because people aren't going to buy until it pulls back to those levels because everybody's watching it. The T line works very effectively, yet nobody has it on their charts, so they're not acting as magnets. So basically what it boils down to is you've got candlestick formations that are the graphic depiction of what's going on in human or investor sentiment, human emotions, and you've got the T line, which kind of acts like its own Fibonacci number, a natural support and resistance level. So when you combine a natural support and resistance level with the graphics of human nature, that becomes a very strong combination. And so I always tell people, don't take my word for it. Put it on your chart and see how often when you see a candlestick buy signal or close above the T line, it stays there until you see a candlestick sell signal and a close back below the T line. And I often tell people that you can add whatever indicators you want to on a chart. The advantage that candlesticks have is we know they work or they wouldn't be around for 300, 400 years. So what's easy about candlesticks or chart analysis is you can see there's not very much on these charts. But if somebody says you ought to add something or other indicator on, you can add it on and see if it works. And if it doesn't work, you take it back off because you know it's not the indicator that's effective or not effective. You know that the charts themselves, the candlestick charts, are very effective. Now you're just trying to find things that you can add to it to make it even more effective. D, I do trade out of the money, all depending on which what the circumstances are at the time. Let's see. HD. Oh, hold on, I'm thinking. I'm going to do some. Okay, and let's see. Oh, Halo, that's what I was thinking. Halo is another one that has a nice rounding bottom, rounding pattern. But if it opens positive tomorrow, definitely want to be in a full position on that one. Okay, all right. Hold on, I'm getting some goof ups here. All right, ALDR. Another great looking chart with the anticipation that if this is wave 1, wave 3 is going to be the same magnitude. Good time for an out of the money on Apple. I will buy out of the money if this is really getting stretched, and we think, notice we're in the overbought area, we've had a little gap up. At this point, what I would do is if I had bought calls down here, because this is what I call the message. The message was they gapped it up. Even though they sold it off after they gapped it up, they gapped it up. This is when you want to start buying, when you see the profit taking's over. This is why we recommended TPH, because it gapped up, and then the profit taking is over. They're taking it right back up. So on something like this, what I would do is if I've got some huge profits on these calls, I'm in the overbought condition, but there's nothing yet telling me that the uptrend is over except for the fact that there might be some exuberance coming in. This is where I'll close out my profitable position, and then I might buy a way out of the money call with a little bit of money that if it still heads up, I'm still going to make some money on that move, but I don't have a whole lot of money exposed at that time. How do we just see this is aggressive buying at the top? You can't, Sean. So if I own the stock after a little gap up in the overbought condition, I would definitely have my stop right here, that if it came back down through there, remember, anytime you see a gap up in the overbought condition, start watching for sell signals. I don't know what that sell signal will look like. It may be a bearish aroma. They open it lower tomorrow and close it lower, or they take it up and do a shooting star. At least I'm right now more conscious of when the profit taking is starting to come in. Again, that's one of those simple rules that you want to apply to common sense, which the Japanese rice traders have. Common sense analysis is where do most people buy? They buy exuberantly at the top. So when you start seeing that exuberance come in, you start looking for your sell signals. OCN. Now again, here's a steady eddy that once it closed above the T-line, all you could do is stay long until you see it close back below the T-line. Were you buying it because you thought there was going to be a steady eddy? Definitely not. But when you can analyze that it is a steady eddy, you just stay with it until you see the sell signal and it close back below the T-line. OVAS. Here's the obvious. This is why the moving averages act as magnets. When you start moving away from a moving average, let's say you're an institution and you really like this stock and you see it selling off, where do you think you're going to wait to buy to see if it's going to support at a major moving average? The advantage we have with candlesticks is we can see immediately what the decision making is at those levels. Now we have a little left-right combo. Wouldn't be afraid to be buying this one on positive trading tomorrow. Apple, how consistent are the waves? That you can calculate. Yeah, this wave right here and this wave right here will be approximately the same. So these are all little pieces of information that you want to know, that if this was a wave 1, wave 2, going into wave 3, and notice how wave 3 started with the message, that if this is approximately the same magnitude as this, yes, you become a little bit more conscious of when the profit taking will start. Yes, Don, this is another reason why you want to know the difference between a pattern and a signal. Signals you want to buy when the stochastics are in the oversold area. Patterns you want to buy, usually the stochastics are already going to be in the overbought area when a pattern gets ready to break out, because that's the buildup of investor sentiment, and it's probably in an overbought condition when they start. I hate when I do that. When the pattern starts breaking out, they've already taken it up in the overbought condition. Bounced right off the 50. Where do you think this is going to take you? First target is right up here, and then you see what it does once it gets to that target. What was stock before OVAS? That was OCN, one of the bank. Again, this is why you want to use the T-line. They close below the T-line because there's lots of times prior to the T-line, I would have bailed myself out and not waited till the end of the day. Now, if it's down here after an hour and a half of trading, what's the logic here? The logic is it's already here. It's down pretty big, and you've been in an uptrend. So why sell it here? Just give it to the end of the day. More than likely, unless something severe has happened, they're not going to take it down too much further. I've discovered that the more patient I am, the better my trading has become ever since the T-line came along. All I do is wait to see what they do by the end of the day. And Kite came right back to the T-line, and notice, notice what type of activity we've had or what type of formations we've had once it got back here to the 50. Just a bunch of indecisive trading. Now what's it telling us? Telling us it's starting to make their decision. So if they're breaking through this downtrending channel, supporting off the 50 after a bunch of dojis, that makes the probabilities of getting back into this position extremely strong, because where would your stop be? They shouldn't close it back below the T-line. If they did, the trajectory is still down instead of curling back up. Cuba. Slow curve, starting to come back up. Let's make this big enough. Kind of a doji sandwich breakout today. This one you can start coming back into. Same thing with the Russia ETF. I guess this is the bear one. This is the bear fund. So on RUSS, you could be buying this one on positive, which means the Russian fund is still heading down. And NRX. Big left-right combo. Remember, the bigger this signal is, the more compelling there's been a change of investor sentiment. And why is this nice-looking chart? Because if it works, look at the percent return potential. Sitting down here in the $8 range, if it came back up anywhere in this area, you've got 120% profit potential to the upside. Dougly, this is, again, the message. The message is they opened here, closed here. The message is different than your kicker signal. The kicker signal would have been opening here and closing up here. Well, they took profits once they opened this thing up, but the message was still that they gapped it up. Once that profit taking is over, you'll be able to see it, basically because of the change of color of the candle. That tells you the message was there, the profit taking occurred. Now when the profit taking is over, that's when you want to start coming in and buying. These are just kind of little indicators or alerts to tell you what type of trades to get into. That if you start seeing buying after this, that means this this force right here is still in progress. And TNK was another one. Nice little rounding bottom, gap up, profit taking. The profit taking's over. You can be buying this one. Okay, I think that's probably all I've got for tonight. See if there's anything going on in oil. Yeah, no. If they brought it up back up after hours, which they're not going to do. Achilles, no, I don't have any shorts because right now I think we're in an uptrend. So I'm not so apt to go after the shorts. Now, AMBA did kind of a Morningstar signal. Notice how the selling ran out of steam here. Not so much a Morningstar is, usually I consider a Morningstar with 2 indecisive trading days and then a big day. Anything more than that I consider a cradle pattern. So I wouldn't be afraid to be buying this one on positive trading tomorrow because your stochastic's coming up, your cradle pattern, you're right here in the support area, and if they can break through this downtrending channel, that means they could possibly take it back up to the top of the trend channel. All right. Kite, risk-reward factor. Yeah, your risk factor is that if they open this and close it back below the T-line, all right, you're out that amount. But if they get this running, this could be a very strong move. Even back up to test the recent high, you have a good, almost a 50% return to the upside. So, all right. So with that, are there any general questions on candlesticks? Yes, we are doing. Again, it's more for the folks that I guess the scanning for TOS is pretty well set up. So most of the stuff that I'll be doing is stuff you've seen already. But I think Hubert will be back on again showing how the scans now are available on TOS and Thinkorswim. Not Thinkorswim, that is TOS. TradeStation. Option webinar very soon. And now that Achilles is back, we'll try to schedule that one in pretty soon. And I know we're going to be tied up with doing a lot for non-members. We might do a Saturday morning session. Can you show a left-right combo? Yes. Gordon, we can do that also. We might have to start squeezing some in on the weekends. And I'm trying to think, should have stayed in Maui. No. Well, that's not a hard decision. Come on, son, I scan, looking for gaps moving above. You can set up the scans any way you want to, Peacock. Yeah, one of the scans that I use, even for TCNet, is my first scan is looking for stocks with stochastics below 20 and they had the biggest percent price move, which we usually, after the first 5, 10, you'll find a few that have some sort of signal followed by a gap up. Brush the snow off the saucer before you retire. The saucer. Oh, got me there. Richard, when we look at the, we do it the other way. We look at, the saucer in Mars. Yes, there is one sitting down there in the little square of Mars. Oh, I got you. the trying to think. Dividends. Not so much the dividends, Richard, when we do a long-term pick. We go at it the opposite direction. We go at it that if we see a chart that has a good long-term reversal in it, not necessarily a daily, but a weekly or monthly chart starting to turn back up, then we go, and because of the longer-term nature of a long-term pick, obviously, is we want to see what the research is of what analysts have come across to decide that is something that you want to be investing in. So we're kind of combining the longer term that you look at a situation, the more you want to see what the fundamentals are, why people would be going after it. So the alert comes from the candlestick charts, and then the research after that as to why is that candlestick chart starting to turn back up. Would you look at the weekly for any information before putting on a trade? No. I'd look at it after I'd put on a trade to see where the resistance level might be. But a weekly chart is just a time frame. It's not a important factor. So it doesn't become a crucial analytical tool, but it becomes a tool for kind of confirming why the daily and the monthly are starting to show. Can you comment on your educational product for how to do scans? Is there more to it than basic candles formations? Oh, just our inputs, which are the T-line, stochastics that we use. Those are already built in. And we've got a few, I don't know whether you would call them proprietary pieces of information, but things to kind of smooth out the process. That's not the right word. Things that will help smooth out things that will make the chart evaluation better by smoothing out some of the indicators. Is there a webinar for scans in TOS? I think these webinars that we have scheduled here for the next few days, Hubert will come on and show how the scans are working for Thinkorswim. I think that's what he'll be doing, is using the candlestick patterns. I mean, that's the whole point of us taking what we've had kind of already formulated for ourselves, putting it out to where they can scan for everything. Let's see, evening star signals. No, that's not an evening star. An evening star is a big up day and a day of indecision. These are just gap ups. This is what I'd be considered more of a classic, which is your fry pan bottom, your J hook. And so if this is wave 1, where do you think wave 3 should be going to? Probably up here to the 200-day moving average. Let's see, IBB. That's got the potential. So if I own this, knowing that I've probably hit the top of the channel and did a doji, I'd probably put a sell stop at today's low. If it came back through that direction, more than likely they're coming back down to the test the T-line. Yes, and yeah, on an individual basis, if you need scans for a specific signal, EDC has them all done up. How long do you hold a position that isn't below the T-line but is obviously not continuing the potential pattern? For example, CYTK. Oops, I'm hiccuping. This one I would still stay in because you still have this as your best friend. And it's also doing kind of a little J hook. Now, there were others. Oh, a humbug. Oh, shoot, there was, which ones were they? It wasn't this one. There are some where something like this. Where after maybe 4, 5, 6 days, it's just moving sideways. And as you can see, it's a little trend channel. I'll go ahead and close it out. Yeah, CRK was a good example. That when it broke up through, it had to stay above the T-line. The fact that it closed below the T-line is telling us two things. Number one, it's closing below the T-line. And two, it's telling us the trajectory is now not good, that we didn't have this J-hook pattern coming out of here. So I'd close this out. So a lot of people say, well, what if it turns right around and heads back up? Well, what if is what we're trying to get away from. But the probabilities are that it's time to get out. If I own this one and didn't get out today, it better open positive and come back up above the T-line to tell me this upward trend channel is in progress. If it opens lower and trades down, I'm out immediately because that's pretty much telling me that the uptrend's gone. Yeah, this one, again, you can stay long on this one. Now, if it went sideways again, more than likely it's waiting for the T-line to catch up. So there's been nothing wrong with it, other than now it looks like it's losing its energy. If this had opened lower or flat tomorrow and wasn't going anywhere, I'd close it out. But what's the prognosis of coming out of this cradle pattern? We have a good, strong uptrend. So there's a lot of times I'll close out a position, and then I'll just put a buy stop at a level that tells me if it comes up through there, they've broken through that resistance level, it's time to get back in. Let's see, was it Rite Aid? Rite Aid was an example of it moved up. It hasn't closed below the T-line. You stay with it. And I'll try to figure out what the other one was. Where you don't think it was WLL. Oh, it was WLL. Notice how the trajectory is kind of fizzled here after a good, strong breakout. So today I would have closed this one out, but I'd be ready to buy it or put a buy stop right up here because if it comes up through the congestion area, it's still confirming that we're in an uptrend. Okay, with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. I'll try to get as many as I can done here. Wendy's, just stay long as it stays above the T-line. And HLIT is still in this 45 degree, and you still have to use the same criteria. Close it out if it closes below the T-line. Notice what it did today. It opened and still closed back up above the T-line, still keeping that the 45 degree trajectory still in progress. LSCC, you stay long on this one. As long as it stays above the T-line, with the prospect that your first target is the 50-day moving average. At that point, you just have to see what it does at that level. And when I say you have to see what it does at that level, I would be buying TLT if it opens positive tomorrow, breaking the downtrend. But I want to see what it does when it gets up here at the 50. And when I say I want to see what it does, we know that if it does a doji or a shooting star or something up here that doesn't show strength when it gets to the 50, you probably want to come back out of it and then be ready to buy it if it comes back up through that level. OREX, this is another good sign of strength. First of all, you got your fry pan bottom, you've got a double bottom, And notice where they took this today. Remember, nobody has the T-line on their charts. But it came right smack dab to the T-line and bounced up off of that. That's usually a good indication. That's that natural indication there's still going to be more upside. They aren't letting it come back. RE is kind of doing the bobble. Notice how it hasn't been able to close below the T-line. This is where you kind of close it out when you see a left-right combo and it opened weaker. With the figuring it could have come at least back to the T-line, which it did. And notice again, it came right smack dab to the T-line, smack dab to the T-line. And so when I say smack dab to the T-line, if you just keep in mind that there's very, very few people that have the 8 exponential moving average on their charts, these are acting more like a natural support level. And where's the next place to buy? If it comes back up to the 200, tells you the profit taking's over. It's time to buy at that point. J.C. Penney. Now, this is the bobble. Came up, hit the 200, pulled back to the T-line. If they open this positive, not only do you have a little J-hook pattern, but it's telling you the bobble is over, that you're going higher. I wouldn't be afraid to be buying that, both for short-term and long-term holds. Ford Motor Company, wouldn't be afraid to be buying this for long-term hold. We're breaking out through this resistance level. There's a wee little teeny gap up here. And I still think Ford can have a $25, $30 price range within the next reasonable amount of time, 6 to 12 months. Goldman, wouldn't trade it because it moves too slow, but as long as Goldman stays above the T-line, we know the market's not going to sell off. And Boston Scientific, figure you're going to be in this 45-degree trajectory. You stay long on this one. I wouldn't want to see it trade back below this level. As long as it stays above there, you should be in a 45-degree. Oh, let's see the euro. Let's see if I can get the euro up here. The euro is not really going anywhere. That's about as sideways as you can get. But that's because the dollar also is pretty much sideways right now until it can break out through this, back up to that level. FEYE. You stay long. Now here's a case too where when you're in the overbought condition, just put your stop at the previous day's open because it shouldn't come back through there. If it comes back through there, where do you think they're going to? Well, at least back to the T-line. So I always put my stop right here because if the sellers have enough strength to bring it back down through there, especially up here in the overbought area, you want to come back out and wait for the next, the profit taking to be over in the next buy signal. Now there's a shooting star, and the reason you would kind of be suspicious of this is notice how far away you are from the T-line, and you're pretty much up near the top of this channel. I wouldn't want to see it trade lower tomorrow. If it trades lower, I'd take my profits with the expectation it's going to come back to the T-line. So what you need to see is for it to open flat or higher and continue to trade higher. Nike, not an exciting one because of the lack of magnitude of move, but notice where it is, right here, smack dab on the resistance level. It used the 50-day moving average today as support. So if it opens positive and you have a doji sandwich tomorrow, you're breaking out, you want to be buying immediately. And BCPC, another one, as long as it stays above the T-line, get ready for a bobble. So if it opened weaker tomorrow, you take profits, and then you just put your buy stop right back up here. But if it comes up through the 50, you want to be buying it again. CELG, Look for a doji sandwich breakout. Remember, it's going to move in the direction how they open after a doji, which means if they open this lower, you take profits. It's coming back down to the T line and doing a double top. If it opens positive, you should be breaking out. KPTI, nothing real exciting here. You're in a, maybe let's see, still nothing real exciting here. You need to see something strong to break this one out. And ENZY, kind of your scoop pattern. You can be buying this one on positive trading with the anticipation your first target is the 200-day moving average. JRJC, this one, notice that it did open and traded lower after the doji, but it's traded right here on the T-line. Now, why would you hold on to this even though you knew it was coming back to the T-line? Because look what pattern it's coming out of. A fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. And what do we expect our next pattern to be? A J-hook pattern. So I would rather hang on to this, expecting this whole setup to be creating our classic J-hook pattern following a fry pan bottom, or if it opens weaker tomorrow, you close it out. SRPT, SRPT, stay long on this one. There's your best friend. There's the makings of a steady eddy. You just stay long on this one as long as it stays above the T-line. Denny's not very exciting either. Even though it's in an uptrend, it's a very slow uptrend. If you like it, you can stay long as it stays above the T-line, but I wouldn't trade it just because of the lack of movement. Defrog, you can get ready to buy this one. There's your kind of your little cradle pattern. It needs to get, I would rather pay up here for it knowing that it's starting to break out. Still not anything that I'd really go after with any great enthusiasm. AAON, just stay long as it stays above the T-line. And MR, nice little breakout of a fry pan bottom. I'd look for the 200-day moving average. There's a little gap right here. So there's still some more upside for this one. CYBR, again, exactly the reason why you want to have your stop at the previous day's open, especially up here in the overbought condition. Because where are they likely going to bring it back to if they come back down through here? Back to the T-line. And VRX, SVRX. The breakout, but notice where the breakout occurred. Where did the gap up occur? After a steady overbought condition. So right now you put your stop right here. You can stay long as it doesn't come back down through that level. And Red Hat was backing off today. Another one where if you were nimble enough, and now this is a case where they weren't that far away from the here to the T-line. So if you're long, you stay long, but it definitely has to open positive and trade positive because this isn't a sell signal. This is just a down day in an uptrend. Kerr, another one where you just stay long, use the T-line as your stop. VHC, let's give this a little bit more oomph here. Another one where you can stay long, and you could be buying this one on positive trading tomorrow. RYAM, another little slow curve breaking out. Just make sure, for some reason, I'd be suspicious of volume, but I don't know that for a fact. You could be buying this one Again, there's a little gap to fill here, which would start you on your way up toward the 50-day moving average. ZFGN. It is a symbol. Anytime you see that doji right at the breakout level, get ready to buy it on positive trading, because that tells you they're going to break it out into new territory. There's a simple rule that they're going to move it in the direction of how they open after the doji. Newmont, J-hook pattern. Notice the little trend kicker, get you broken out. Stay long until you see a sell signal. Expect that you're in wave 3. UNP, this one, you can stay long, but it is so boring as far as price movement. I wouldn't bother with it, but it's in a slow uptrend. The Russell, notice how every time they bring it down, they take it right back up. Another one where you can, the Russell, you just stay long, or it's in an uptrend as long as it stays above the T line. Facebook needs to open positive and trade positive tomorrow. If it opens lower, they're bringing it back to the T line. XON, another good-looking chart. Whoops, it was good-looking earlier today. This one, if it opens lower, they're going to bring it back down to the T line. It won't reverse the trend just yet, but that's a big, huge shooting star in the overbought area. It has to open positive and trade positive to stay in it. And VRX, well, we did that one. Use today's open as your stop. Hydra. Another one where you just stay long, as long as it stays above the T line. And THLD. Buy this immediately on a positive open. Your doji sandwich breaking out into new territory. Halo, we bought Halo today, and you still can buy this one on positive trading tomorrow. And you're not quite in the overbought area. If they can break this out, you have another potential of a wave 3. And RGLS, left-right combo. Okay, somebody was looking for a left-right combo. There's your left-right combo. A doji followed by a bullish engulfing signal. Usually implies that they've made up their decision after that day of indecision, and there's usually going to be a lot more to the upside. RCAP, another one you want to buy immediately on positive trading. That's a good-looking chart. Big fry pan bottom, broke up through the 50, using the 50 as support. Positive open doing a doji sandwich would get you closer. And even if it came up here just to test this level, you still got approximately a 15-20% upside. And ARRS, this one you definitely want to see open positive. If it opens lower, you can take profits because they're coming back down to test the 50/T line. COM, slow curve, fry pan bottom. Stay with this one. And Bristol Myers. What did I do? This one, there's it again. There's your left-right combo. You can be buying this one. Again, not a very exciting percentage-wise, but at least you know you're in an uptrend. ARWR, we did that early. ARWR. You can be buying this one. Potential of the 200-day moving average. This one's kind of in the bobble. This one you can buy. I would rather pay $14.50 knowing that it came up through this level and breaking through this downtrending channel. NVAX, just stay long. At this point, I would use the low of this candle. And if it came back through there, they're profit taking back to the T-line. We did Wendy's, Goodyear. Again, stay long on this one until you see a sell signal and a close below the T-line. MGM, another one where you just stay long with the anticipation that it will get to the 200-day moving average. CPE, this one has to open trade positive to stay in that 45 degree. If it opens lower, you close it out and just wait for the next buy signal. NOG, this one should have been closed out today. You can always buy this one back if it comes back up through the T-line. WPRT, this one you get ready to buy based upon the left-right combo right here on the T-line. If it opens positive, breaking this little downtrending channel or wedge, good likelihood moving up to the 200, which would give you a good almost a 90% return on that trade. POWR, that gap up, you buy on positive trading, use the open of today as your stop. Old, you just stay long. Notice a little kicker type signal here, little scoop type pattern. You just stay long as it stays above the T-line. ACHN, it's still one that if you buy it, you've got to watch to get it through the 50. It's just been so sideways here for a while that if you're long, you stay long. I probably wouldn't go after this one, though. And SRPT, just stay long on this one. That's a good-looking chart. WRE, this one you can be buying. Again, notice the support right here on the 50. Got a little bullish engulfing signal. If this heads up, wave 1, wave 3. Lulu, got kind of you had the shooting star, hanging man, bearish confirmation, closed below the T-line. This is one that if I owned, I would have closed it out and then just put a buy stop up above here. But if it came back up through there, you want to be back in it. Staples, nothing here. Wouldn't be long or short. Just no trajectory to this one. EBIX, more than likely there's your hanging man with it trading or closing back below the low. More than likely it's coming back to test the T-line. If it opens lower tomorrow, I'd take profits and wait to see what it does at the T-line. Cyber, you want to see what this one does at the T-line tomorrow. And MDRX, stay long on this one. If it opens lower, it's going to come back and test the 50. So you take profits and then just see what it does when it gets back to the 50. Which means if you're trading it aggressively, once it gets back to 50, you flip to your 10-minute chart and see what the 10-minute chart is doing at that level. Depot, all you can do right now is stay long on this one. Wave 1, wave 3 in progress. And WBA, another one that you can stay long on this one. Notice the little morning star signal, doji gap up. At least you know probably your next target is back up to the top of the trend channel. I think we did XON. Yes, this one has to open positive tomorrow to stay in it. And Tweeter is in the 45 degree. You just stay long as this stays above the T-line. UNG is a short. Yes, there's your gap up, left-right combo. If it came back down through the T-line, I'd probably be going short on this one. How come these get so small? Easier to see if we made them bigger. So if this came back down through the T line, as you can see, the downtrend would still be in progress. LPI, this one you should have been out of today. Based on the lack of trajectory and the close below the T line. I think that we did be PRT. Yes, this one you can be buying on positive trading tomorrow. That's a good looking chart. And Disney, there's your 45 degree. You just stay long as it stays above the T line. SCO. This one, nothing real exciting about it, but you can be buying this one if it comes back up. That's the short crude. Yeah, so if crude heads down, this should get up through the 50. SD, one of the oils, get ready to close this one out if it closes back below the T line or even starts trading below the T line tomorrow. And EPZM, notice how it used the T line as support. Another one you could be buying on positive trading. And Amazon, just stay long, still in the 45 degree. CLF, this one I wouldn't be long or short right now. No trajectory, and there's nothing there to make you want to buy it. We did FEYEISIS, needs to open positive tomorrow or at least stay above the T line. Again, this is the type, once there's the Morningstar signal, there's your doji sandwich. As long as it stays above the T line, you stay with it because it's got the potential of moving back up into the trend trajectory, which it has done in the past where it's pulled back and come back up into the trend. So I would expect the next move up into this area someplace. We did Red Hat, Walmart. Walmart, I wouldn't be long or short this one. That's just a junky chart. Let's see. EIOC. Oops, now I got to make these bigger or we can see them again. There's your little kicker type signal. If this opens positive tomorrow, just make sure your volume's good on this one. Did we do Ballard? Ballard needs to open positive to stay in it. If it opens lower, it's coming back to the T line. If it starts trading positive tomorrow, it's going to test the 200. If it breaks through the 200, you're all right. It looks like First Solar did an agreement or joint venture with somebody or combining with somebody. I think they were trading up 10% after hours. So you just stay with this one. And Gene, you should have been out of. Got to wait for a buy signal and to close back up above the T line. This has got the long-legged spinning top. It has to open positive and trade positive. If it opens lower, it's probably coming back down to the bottom of the trend channel. Back down here, you want to close out the position. Okay, no problem. Merle, hack. Another case where when you're that far away from the T-line, set your stop. I would have stopped out of this today. You could always buy it back on positive trading tomorrow, but the probabilities are that it's going to come back down and test the T-line. Remember, the further away you move from the T-line, the higher the probability it's going to come back and test it. This one you can stay long. You're still above the 3T, but if it opened lower, I would think you're coming back down to the bottom of the trend channel testing the 3T. Luciano, what have we got here? Laundry list. Mac, use today's low as your stop. It shouldn't come back down through that level. Arna has to open positive to stay in it. If it opens lower, You've lost the fry pan bottom trajectory. And EXXI, let's make this bigger. This one has to open positive. If it opens lower, right now I would suspect it's still in an uptrend, but if it started trading back down below the T line, I'd close it out. And Yahoo, I wouldn't be long, and I probably wouldn't be short because your next move is only maybe a 5% move down this level. If you are short, ever since your big bearish engulfing signal that failed at the T-line, this is the blue ice failure. Came down through the ice, came up, failed, it's going to the next support level. And Twitter, again, stay long as it stays above the T-line. Lean hogs, if it opens positive, I'm buying. If you've had your kind of your doji sandwich, positive trading would take you back up into the profit-taking area. Stochastics coming up, and the fact that it's breaking this downward trend channel means your next target could be the 50-day moving average. Let's see, XON needs to open positive and trade positive. If it opens lower, we want to take profits because it's more than likely coming back down to test the T-line. Again, that's a big shooting star signal up here in the overbought condition. Any weakness, we close it out right away. And RTN, you stay long on this one. It's a big reversal down here. And then you have your little left-right combo breakout. You stay long until you see a sell signal. Let's see. UGAZ, stay long, but it needs to trade positive from here. MTSN. Another one where you stay long. Notice your big left-right combo, smack dab on the 50, and kind of a doji sandwich. Just stay long. At this point, you use today's low as your stop. You're in the overbought condition. It shouldn't come back down through that level. Kroger. Kroger, that's a steady Eddie. All you can do with this is just stay long. Baba is having a hard time. You stay short on this one until you see a buy signal, and it's not there yet. RMTI. This one you get ready to go short on any weakness. Especially if it opens weaker tomorrow, to see if it can get down through the 200 and the 50. And Plug, the Plug has some news late today. Plug, you can be buying on positive trading. This little slow curve breakout. Okay. If there is time at the end, PTRA, can you explain what this inverted hammer type of signal is? I sold this around 30. Is it worth my buying back? That was on RTA. No, that's not an inverted hammer. That's a shooting star. Remember, an inverted hammer occurs down here in the oversold condition. A shooting star occurs up here in the overbought condition. So that is a shooting star. At this point, I would put your... Oh, you sold it. Let's see. I sold this around 30 bucks. All right. At this point, it's not a good-looking chart anymore. So you sold at the right area because you had a big day, profit taking, another big day. This is where I'd have flipped to my 10-minute chart because notice how far away you are from the T-line, let alone the 3T line. So you did all right on this one. Yeah, I wouldn't be anxious to jump back in it because your risk-reward factor is not great here. I mean, it could go up as well as it could go down from this point. There's too many other charts out there right now where you take your profits and go on to the next one. That's what we're in the business for. I still have the options on ISIS, yes. I'll continue to stay long as it stays above the T line. Would you hold ISIS through earnings? Yes. If it shows that there's strength, earnings are Friday. If it shows they're still buying going into earnings, that means somebody a lot smarter than me knows what's going on. I'll hang on to them. Box, you can be ready to go short on this one on any weakness. And IBIO, Maria, hang on to them. I will contact them tomorrow. What did we do here? IBIO, you can be buying this one on positive trading. And is this Whole Foods? All you can do on this one, I wouldn't trade this one. This one's just kind of steady Eddie. You stay long. Whoops. HOLX. Another one where you just stay long as it stays above the T line. KORS. I wouldn't be long or short this one. There's no chart there. DDD. Another one I wouldn't be long or short. There's no trajectory. KERX. This one you can stay long as it stays above the T line. I wouldn't be real aggressive on this one. There's better charts. And here's another one, SIGM. Wouldn't be long or short on this one. IMPV. Use the 50 as support. This one, if it opens positive tomorrow, you can still be a buyer of this one. Salt. This one has to open, stay below the T line. If I was buying this, I'd probably want to pay whatever this is, $235, knowing that it broke out through this resistance level. An ARO. Jack, no, we can't. Yeah, I don't think we've got anybody that could review or we can record daily charts. So, anyways, what is this one? ARO, just stay long. All right, one more. KND. You could be buying this one, but I'd rather buy it if it came up through today's high, breaking out of this downtrending channel. And it wouldn't be real excruciatingly exciting. Yeah, I'd just stay long on it. Okay, let's call it a night. We'll see everybody bright and early in the chat rooms tomorrow.